What's good, man? What's good? Let me take these off. What's good, man? Episode 4, Emotion 101, How to Invest in the Stock Market. Today, we're going to talk about something that's extremely important when we're talking about investing. And this goes for whether you're investing in a stock, whether you're investing in an ETF, dividend stocks, you know, anything, a high yield savings account. This applies to all of that. And this is the reason why I said before that when you're investing, time in the market is one of the most important factors. Time in the market is one of the most important factors, and that's in the Motion 101 formula. I hope you wrote that down. Time in the market is imperative. It's important. Why? Because of compounding interest. When you're talking about compounding interest, when you let time do its thing, your money will grow tremendously. You're going to gain interest on interest on interest on interest on interest. You got me? And one principal investment could snowball and turn into something massive when you let time do its thing. So let's get into it. We're going to talk about um compounding interest. All right. So here's a chart. On this chart, we have principal investment of $1,000. Interest rate, which on when I form this example, I'm basing it off of when you invest in like an index that tracks the S&P 500, like VOO, for example. The S&P 500 has been giving us an annual return of around 10 to 12%. So I use 12%, kind of on the low end. So when we're talking about these numbers, this isn't fictional. This isn't make believe. This is something that can really happen. And sometimes your annual interest rate, depending on what you're investing in, it could be a little higher. It could be lower some years. It can skyrocket. It's the stock market. But for this example, principal investment of $1,000. We have 4 different time frames: a 10-year period, 20-year period, 30-year period, and 40-year period. Interest rate, like I said before, I used 10% rate. That's not out of the ordinary in the stock market. That can be achieved. 10% annually a year. If you invest in some of the things that 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 I talk about, whether it's on any of my social media platforms. If you don't follow me, make sure you follow me on Instagram, especially Brandon C. Lewis, because I give a lot of game. I just made a post earlier this week about some things that I've invested in. I've invested in AMD this week. They were at a 52-week low. I invested in them, bought 20 shares. I bought some Broadcom this week. I bought some Palantir this week. I bought some Nvidia this week. I started a position in SCHMD. Yeah, dividend ETF. So I'm making a lot of moves. I'm showing you my plays. I'm showing you my ideology, why I'm doing what I'm doing. I'm breaking down the math for you. And compounding interest is one of the biggest reasons why I started my position in my dividend ETF. I started a position in a dividend ETF just 2 days ago. And I'm going to put money in there every 2 weeks, every month, big lump sums here and there, and building that up. And I plan to build that account up for the next 5, 10, 15, 20 years. And it's going to yield me a return 3 times a year. And eventually, I'm going to be making 6 figures a year just from dividend payments. Just from dividend payments. You got me? And the compounding interest is going to do its thing. And the amount that's in that account is going to continue to grow and grow and grow. And that's going to happen to a lot of my investments because what do? I invest in the long term. I let my investments sit 5, 10 years minimum. Got me? We letting compounding interest do their thing. So back to this chart. $1,000, 10 years, 10% rate. Look at the value, $2,593.74. That's with your money doing nothing. You put $1,000 in, you let it sit, and that's what it turned into, $2,593.74. Just let it sit. $1,000, 20 years, 10% rate, $6,727.50. That's just $1,000. You just let it sit. 1,000 again, 30 years, 10%, 17,449.40. See, you seeing it? 1,000, 40 years, 10%, $45,259.26. That's insane. Are you guys seeing the power of compounding interest? I mean, look at the numbers. Numbers don't lie. Numbers don't lie. The principal interest didn't change. The interest rate did not change. The only thing that changed is the amount of time that the money was allowed to grow. You're gaining interest on your interest. That's what compounding interest is. You got me? So if you gain 10%, that thousand might have turned into, what would that have been? 1,100. You let that sit. And this is the thing. When we're talking about compounding interest, these numbers are just if you put $1,000 in and just left it and let time do its thing, compounding interest happen. These are the figures. But imagine if you put money in that thing every 2 weeks, every month, every year. While compounding interest is doing this thing, now you're accelerating it. You got me? And then say you invest in a stock like an Apple, or an Nvidia, or a Tesla, a Netflix. These stocks that have been performing like crazy. Now your compounding interest is getting accelerated. So compounding interest is vital. It's vital, and that's why I said that time is of the essence. You have to get started today. Last episode, I told y'all how to go through a brokerage. Before that, we talked about breaking down your finances. We talked about deciding how much you're going to invest, whether it be weekly, every 2 weeks, monthly. So we've talked about that. We talked about breaking down the finances. We talked about all the different brokerage accounts, what to look for in them. So you should have already chose a brokerage account. Now I'm talking to you about compounding interest, letting you know the power of why it's imperative to start now. So I feel comfortable telling you right now, if you went and put money in that account, you can put money right now in VOO. I feel comfortable telling you that. Throw some money in VOO. And this is another thing. It don't have to be, we talked about this. You don't even got to buy a full share. How much is VOO right now? Let me look it up. For y'all, man. VOO. VOO is $545 a share. Let me tell y'all another one y'all could buy. VTI. Is another one. $293.28 a share. You feel me? So, but VOO or VTI, I feel comfortable telling you to go put money in either one of those. If you can afford a full share, great. If you can't, dollar cost average in. Put what you have. Every 2 weeks, every month, let it build up. You got me? Don't be intimidated by the price. If you can't afford a full share, don't matter. You can buy fractional shares. Let it build up. I bought fractional shares. I still buy fractional shares because I dollar cost average into a lot of different stocks, a lot of different things. I'm going to dollar cost average into that dividend ETF I just told you about, SEHD. You feel me? Let time do its thing, but you have to take action today. You got to take action today and let time do its thing. So that's just something quick. You want to get your money that you've put. If you followed along, okay, you said I'm allocating this amount of money. He told me how to break down the brokerages and which ones and yada, yada, yada. So I chose my brokerage. I made my account. I linked my bank account. Now I'm going to put money in there. What can I put my money in right now while we're still learning the game? You want to get your money in the market. BOO, VTI. BOO, VTI. Or SEHD. VOO, VTI, or SEHD. And I'm never going to tell you what to buy. I'm telling you what I'm invested in, what I buy. I've done a lot of research. And the 3 things I just told you are 3 things that I've put my money into myself. So I encourage you, never just listen to anybody. I'm not a financial expert. This is not financial advice. VOO, VTI, SEHD. Go do your research. Go look those up. Go look into them. And remember, I just put out a video a couple of days ago. Yahoo Finance, how to break down these stocks. If you want to look into different ETFs, etfdb.com. I'm giving you game right now. I'm giving you game. You got an iPhone, you can go right to the stocks app, type in the ticker symbol, see what it's looking like. Go do some research. VTI, VOO. Go look into them. Go look into those ETFs, and that will allow you to track the S&P 500. And get you some of these gains. And start letting your money get into the market, give your money the opportunity to grow and get some of this compounding interest. Let's go into the next slide. All right. So here we have it. We got 4 stocks here. 4 stocks. You got Apple. It's the first one. I took the liberty of doing the research for you guys. And when you're looking at these numbers, you might look at these numbers and say, this look crazy. But it's real. Compounding interest. I'm trying to tell you. I'm trying to give you $1 million worth of game. Shout out to Gilon Wiley. I'm trying to give you the game. Apple, if you would have put $1,000 in Apple 10 years ago, it would be now worth $8,719.06. We all know Apple. Everybody got an iPhone. Everybody got an iPhone. Why you not in? Everybody got an iPhone. Everybody got AirPods. Everybody got MacBooks, iPads. Why are you not invested in these companies that you believe in? You got a whole ecosystem of their products. And that's another thing we're going to talk about, a moat. Invest in companies that have a moat, companies that have a cult following, an ecosystem. People can't live without it. I'm trying to tell you the game. That's what $1,000 would have been. $8,719.06. You see what I'm saying? And we talking about dollar cost averaging into these stocks, buying full shares at a time if you can. We talking about 10 years ago. We trying to put more than that, just 1,000. That's just 1,000. Imagine when we would have put 10,000. Come on, you see what I'm saying? And that's just 1,000, 10 years, and look what it's turned into. That's what compounding interest does. You're getting interest on your interest. So if 1 year was 1,000, you put some stuff in, it turned into 1,500. Now you're getting interest on that 1,500, and that turned into this. Now you get interest on that, and that turned into this. You get interest on that. You see what I'm saying? AMD, another great company. Makes semiconductor chips. They're right up there with the NVIDIAs. AMD is a company I just bought 20 shares in this week. They're at a 52-week low. I believe in them. They're going to get market share in this semiconductor chip game. I believe in them. You have to do your research. But AMD, if you would have bought AMD 10 years ago, $1,000, it would now be worth $33,647.48. Now you may say, AMD bigger than Apple? Maybe not. They're not. They're not. But we're getting into AI. We're getting into all of this technological advancements, and AMD is playing a big role in that. Semiconductor chips are on fire right now. They're powering the AI and all the technological advancements, the data centers, the supercomputers, all of these things that are happening right now in the tech space. A company like AMD, they're flying crazy. They're going crazy. And they're going to continue to elevate. Amazon, everybody know Amazon. You probably got some packages at the door right now. Company like Amazon 10 years ago, $1,000 investment would now be $10,071.83. You picking up what I'm putting down? Tesla, your bestie in the Tessie. You feel me? $1,000 10 years ago, $10,127.22. And I'm saying, and that's just $1,000. That's just $1,000. Well, we didn't blow $1,000 on a lot of things that ain't brought us no returns. And if you make the sacrifice and you putting thousands or tens of thousands, or you build that thing up hundreds of thousands, and compounding interest is able to do its thing because I'm showing you what $1,000, just a single $1,000 investment, nothing else. Just I'm showing you what a single $1,000 investment has the power to turn into when you're talking about compounding interest. You know, in the slide before, this is just 10,000, a set rate. Like if you invested in something like a VOO, VTI, tracking the S&P, total stock market, about a 10 to 12% on average of what it's been doing. You see what that can turn into, over a long period of time. Look at that. That 40-year turned into 45. You feel me? Then we go to this slide over here. Peep that AMD. That AMD 10 years. That same thousand turned into this. This is what I got to tell. This is what I was telling you about when depending on what you're invested in, different stocks, that compounding interest can be accelerated because those different stocks are growing at different rates. They're growing at different rates. They're giving you a different annual return on your money. So depending on what you're putting your money into, it can accelerate that compounding interest. As you can see, as you can see, so I hope y'all understand the importance of compounding interest, the importance of why you need to start as soon as possible, the importance of dollar cost averaging if you have to. You don't have to buy full shares. Dollar cost average, just put your money in the market and give it time to work. Give it time to work. And that's why I say invest for the long term. Invest for the long term. Once you put the money in there, don't go back. Don't go and get it out. Don't go back and get it out. Don't get hit with capital gains. Don't watch it every single day. Do your research beforehand. Know what you're investing in. Believe what you're investing in. And then pay attention to the news. Read every single day. Follow your stocks. Listen to their earnings reports. Watch CNBC. Keep up with what's going on. So you know how to move accordingly if you need to. You know to double down if you need to. You know to maybe take some profit if you need to. You have to pay attention. But the sooner you get that thing in the market, compounding interest can start to having its effect. See what I'm saying? Episode 4, Motion 101, How to Invest in the Stock Market. Thank you for being here. Go do the homework. If you ain't broke down your finances yet, you tripping. If you ain't looked into the brokerages and selected one yet, you tripping. Go put some money in that thing. Again, go research VTI, VOO. Go look at them. That's your homework for this episode. Go look at the VTI, VOO, total stock market indexes. Go look into them. Let me show you something. VTI. And when we're talking about, this is the thing. Do you think that you're going to be able to work your way to the lifestyle you want? Do you think you're going to be able to work your way? Let's just be honest. You see this number. Look at this. Look at this. Look at that. Look at any of these numbers. Apple, AMD, Amazon, Tesla. Over the last 10 years, have you saved those amounts? Do you have those amounts in your account right now? If the answer is no, you need to be investing. And even if the answer is yes, you should have been investing because those amounts could have been night and day. You got to get started now. Tap in with your boy. Over the Counter Podcast is coming real soon. You dig? Follow along. We're finna keep this thing going. We're finna keep it building. And soon, once I get y'all up off the porch, once y'all, get right now, y'all still some babies, man. Y'all still some babies. Some of y'all more advanced. Some of y'all already at the level y'all ready to start getting into the deep analysis. Y'all ready to start breaking down these companies. But for others, we don't want to move too fast. So I need you to get the fundamentals. Once you have the fundamentals, you'll be able to apply them. You'll have the information for a lifetime. You'll be able to apply it. You'll be able to go research your own companies. You hear about a company, you'll be like, all right, somebody tell you, all right, go invest in this. You'll be like, all right, bet. You'll know the tools to go look into it. You'll know how to break the company down, what to look for, what certain metrics are. And you'll be able to make sound decisions when you're investing. You got me? And don't even ask me about no day trade. Don't ask me about no futures. Don't ask me about no options and none of that. I want you to get the fundamentals. I want you to become a long-term investor first. Then we can get into all that. You got me? Lock in, share, like, subscribe. Thank you for tuning in. We'll be back with the next one. We'll be back with the next one, man.